All right? Now, obviously, Baba, Baidu, JD, Tencent, most of the big guys of the Chinese stocks just got absolutely annihilated. Not only, the last few weeks. No, Jung, we didn't. There will be no signal for Apple until later in the day if there is one. Okay? They've gotten annihilated. Right? Over the last couple days, there's been a bit of a rebound because now there is some talk that maybe, just maybe, there's going to be a little bit, light at the end of the tunnel with the China tariff talks. So that's why we've seen actually a really nice rally in these two stocks that we have up on the board, Baba and Baidu. Okay. So let's take a look. Baba's 147.5. It's our expected move. Anybody? Juan, what do you think? Okay, Robin, you say about $8. I'm on board with you a little bit there. Anybody else? Okay, Gitano about $8. Juan says 875. Okay, 8-ish. Yeah, so we're all in kind of agreement there. And we're right in the middle of two strikes. Okay, so let's take a look. Choose your poison. Let's look at the 147 straddle, which is about $8.15 minus the 35 cents in the money. So about $7.80 or so. So I think $8 is a good call. Punitha, if we were on prices right, you would have won. Okay, let's get a whiteboard started here. Now, I have my own thoughts going into this on Baba, but I'm not going to reveal them until we dissect what's going on here. Okay, stock 147, expected move of $8. Gives us an expected range then of 139 up to 155. Okay, so 139 and 155. Is there going to be anything there? I'm going to tell you there's probably not, because there's not a lot of data because the stock hasn't really been down here for too long. But you can see the recent low, which this is here's another thing, guys, and you know what? You guys can call me out on this because I deserve to be called out. I didn't pick up on this. You know how we love those gap fills, right? Look at this. Look at this gap fill. Now, it's not a recent one. It's going back a year and a half. But look at this gap fill. And look where this thing bottomed out. It got to that gap and boom. So you guys can call me out for not noticing that one, because that would have been a layup of a position, even if it were just a matter of selling a put spread or something at that point. Okay, Jung, we'll go into that a little bit later. Okay, so the range that we talked about here, 139, 155, I'd say there's some congestion in here, okay, which also coincides with this high volume area. That's right around 141, so a little higher than what the expected move is to the downside. And 155, not much there, but you do have the 50-day moving average just above that. Okay, so some support around 141 and resistance at around 157. Okay, now, like I said, this thing's been, falling off a cliff, falling knife here. Much of it because of geopolitical risk, geopolitical events with the tariff. Okay, I will tell you, after looking at the fundamentals of BABA, that nothing has changed. Nothing has changed fundamentally about this stock. They also have their big singles day coming up, which is, I heard this yesterday actually, that's like Amazon's Prime Day. Their singles day, just to get a sense of the vastness of Alibaba and their reach, their singles day is 7 times the size of Amazon's Prime Day. Okay, now, does that mean it's going to go up because that's coming up? No, it doesn't. But it is something to consider. Okay, but more importantly, the fundamentals of Alibaba have not changed. Okay, in fact, let's see here. Here's a brand new report that just came out here. Alibaba earnings, what to expect. Analysts are not very excited about the upcoming results. The slowdown that they've had is mainly due to the macroeconomic environment. Well, if we have hit bottom, or if there's some glimmer of hope, what does that say? Here's another big, yes, Punitha, I totally agree with that. No, Joseph, the fact that Jack Ma is leaving, that's baked in already for months. Now, here is a very, very important point. 75% of its revenue generated outside of China. Okay? This is all going to be, yes, it's results, but like this article says here, this is all going to be about the earnings call, which they are expected to really talk about the trade war situation and also Singles Day, which is coming up on November 11th. Okay? Analysts expect Alibaba's net profit to decline, so everyone is bearish on this thing. Everyone is bearish on this thing. I like when everybody gets on one side of the fence, because I like taking the other side. Always. Except on the craps table. I never play the don't pass at the craps table. Okay. So the stock, we were 147. We are now 148 and a half, actually 149. They must have heard me talking about BABA here. So the expected move is still the same, but the range is going to be a little different now. But still, let's look at the 139, 155 areas. Okay, let's look at, how about a 140 140, 138. And on the upside, though, there's only $2.50 wide strikes, so we're going to have to kind of look at that. Okay, no thank you. No thank you. Okay, this iron condor, which is $2 wide on the downside but $2.50 wide on the upside, is trading for less than $1. Almost makes me want to buy that, which I won't, but it almost makes me want to buy that. Okay, so to me, iron condor here is just not lining up. But again, things are going to change by the end of the day because since we started this conversation 6 minutes ago, 10 minutes ago actually, the stock has rallied $2.20. Well, no, the reward to risk wouldn't be 1 to 3, Pranitha. If we did it, let's say we did it for $1, just for rounding off, okay, it would still be 1 to 1 on the downside. But on the upside, that's where it brings in additional reward to risk. It would really be 1 to 1.5 or, 0.75 to 1. If you aggregate that out, no good. Okay? So let's look at a strangle swap. Let's see what vol is doing. And actually, on the move up today, and with the China talk that came out this morning, Trump tweeting, yeah, look at this. Trump tweeting that they had some good conversations, okay? Going into earnings, vol is down 7% today. Now, it's coming from a high point to start, but it's down 7% today. Okay, let's take a look at a strangle swap here. Okay, if we still take those same ranges, which now have really changed considerably, but we need to have a starting point somewhere. Let's look at the 140, 155 strangle swap. Okay, so what we evaluate this week's implied vol at, the short options expiring tomorrow, really is irrelevant because at the end of the day tomorrow there's going to be no volatility left in it, right? All the premium is going to be out. All of those options that expire tomorrow are either going to be zero or parity. The big thing is what's going to happen to the long volatility of next week. So that's where we have to see what has happened here with this vol. Okay, let's adjust this down by about 30%. And adjust this down by about 30%. And this is actually better than I thought. It's not a cheap strangle swap. But this is actually better than I thought it was going to be. And that's what it looks like tomorrow, so we would not do this. Okay? We would absolutely not do this. Why do I say we wouldn't do it? Is because given the implied vol expectations that I've calculated in here, we'd be at a losing proposition. Everybody see that? Now, I am absolutely biased to the upside on this. And let me tell you why I'm biased to the upside. A, because I discussed this earlier ad nauseum, the fundamentals of this company have not changed. There has just been the glaring headline risk of the trade tensions that have just killed these stocks. That's number one. Now, could that be reflected in its earnings report? It absolutely can. Okay. That being said, I think there's pretty limited downside here. I really, really do. Okay, so what I want to look at is to see if we can get inexpensive. Inexpensive meaning reward to risk-wise, either call calendar or just a straight vertical upside call position. Call spread, broken wing fly, that sort of thing. Okay, first thing I want to do is I'm just going to look at a call calendar up at the, and I'm going to go higher than the 155 we have on the board now. Actually going to go up to 157.5. Again, I'm gonna knock about 30% out of next week's volatility. So if it doesn't lose that much, it's a good thing. But I want to be very, very cautious with that volatility. So the call calendar probably cost about $1. Okay, this chart here tells me what? If we have to pay $1 for that, what does that tell me? Here's the projection.
A little less than 1 to 1.
Yeah.
Yep.
Okay, a little bit less than 1 to 1 at its high point there. Thank you, Greg. Yeah, a big resounding nope. You're welcome, Ning. Yeah, a big resounding nope. Okay, now that doesn't mean there's not some sort of upside potential, but just based on the volatility right now, I would not want to do this call calendar. Okay, so let's look at straight directional play. But again, much like Apple, I don't want to do something necessarily just for tomorrow, because one day you got to be right or wrong. I want to give ourselves a little bit more time if buying that extra time doesn't really cost us anything. Okay, so with an expected move for next week up at, it's about a $10 to $10 move for next week. So we can even target, 159, 160. Let's see what a $5 wide call spread for next week. Start off there simple. Well, that's not so bad right there, guys. If we could get that for $1.25-ish, and that's a little bit below midpoint there, so the stock would have to come in a little bit. If we could get that for $1.25, that gives us 3 to 1 reward to risk. Okay, now I just started with those strikes because they were easy strikes to start with based around what the expected move is. Okay, so that's not bad. That's not bad there. Let's look at a broken wing fly. Okay, here, got to take that November 2nd position out of there. Okay, here, this is a $7.50 wide broken wing fly. Okay, $2, I probably wouldn't want to do that because at $2, and I'm doing this in my head really quickly, $2 only gives us what reward to risk? It's not bad, but it's not as good as the 3 to 1 that we had before. It gives us 2.75 to 1. Now, why is that? Because we could make $5.50 on our $2 investment. It's 2.75 to 1. So not bad, but not as good. Hi, Scott.
Hey, fellas.
Not as good as just the straight call spread. Okay, now, if we could buy that somehow for $1.80, now we're talking, right? Because at $1.80, now we're well over 3 to 1. Now we're at about 3.3 to 1. Okay, so here's a situation. You say, well, Scott, what's the difference if I buy it for $2 or $1.90 or $1.80? It's only 10 cents or 20 cents different, right? Well, from a dollar standpoint, 10 or 20 cents may not seem like a lot. But when you put it in terms of your reward to risk, it's huge. Huge. Okay? Everybody with me? Kinda. Okay? Tell me, Lionel, what is not clicking for you right now? Lionel, what can I expound on for you? Okay, that's cool. That's fair. That's fair. Okay, so much like Apple, I don't want to put anything out there yet. Okay, I am leaning towards the bullish side. Absolutely leaning towards the bullish side, but I don't want to put anything out there yet. But this gives us then a sense of where we want to start when we pick this back up this afternoon at 1, 2 o'clock. Okay, so let me just put up here, iron condor, not good. Strangle swap, not good. Call calendar, not good. But a potential broken wing fly is in our sights. Okay, so this is what we're going to come back to this afternoon. All right. All right, let me get this video posted up here. And I'll be right back, and we will continue on.